Good morning. No, I think expectation is very good. People want to own home, and there is a large appetite in the market. Uh, we as a company are more into mid-income housing, and I think mid-income housing is doing very, very well. I would say price range of around 50, 60 lakhs to 1.5 crores or so. So our maximum luxury housing itself is also doing well. There is a lot of demand for there, but if you see the report, 62 to 65% of sales today is in mid-income housing, and and we think that they should do well going forward. And there are reasons for that because there is a interest now interest pause there. There is a uh, change in demographic of the investors as more millennials and Gen X are investing into the property. And if you see NROC report, 61 to 65% of people today want to invest in real estate. So it's a positive demand. There is a consolidation of developers. All developers are doing right thing. They are seeing to it that inventories are managed very, very well and they don't oversell themselves. So I think the timing is good, and this festive season there should be a very good demand Q on Q basis as well.
Okay, and given that Q1 was a bit sluggish, there were a few delays in launches on account of the government change in Bengaluru. What is the situation right now? And can you highlight for us some of the launches that are planned ahead of the festive season?
So we have 7.5 million launches planned till rolling 4 quarters. We are targeting that maximum launches will happen in Q3 and Q4 because right now in Karnataka, because of the government change, still approvals are not that is not coming, and things are improving. But going forward, slowly it should start coming. So we are thinking. We are planning that quarter 3 and quarter 4 there'll be bulk of launches, mainly in Bengaluru, and one or two launches in Chennai as well.
Right.
Okay.
The general expectation is that the second half is expected to be better than first half for most developers. Do you think this time around maybe you could cross that 4,500 crore rupee of pre-sales mark?
We can. I cannot say that. It depends upon how the market is going to behave. But there are some headwinds also, like inflation and as well as the general election. But seeing the demand and the way the reasons I told you, definitely we can cross 4,200. At least we are aiming for that.
Good to hear that. You've also recently acquired a land parcel in Chennai, right, with a development potential, as we understand, of 1 million square feet. Considering the average pricing trends, is it fair to assume that this could contribute upwards of 650 around crores of pre-sales value? And also, what's the scheduled launch date?
No, so the area which is there is in OMR, and we have developed our World Trade Center there with GIC, and it has been doing very well. Even residences has been selling around 14,000 or so there. So we target that GDV of this pre-sales value of this property will be in the range of 1,000 crores or so. This is a very prime property of 6.5 acres and 1 million just on the OMR road. So we are looking more than realizability of 1,000 crores in this property.
All right. Can you also provide an update on the TVS land launches? Is that on track, and what exactly kind of a contribution that you expect? Because you've also made a slew of land acquisitions of late. Can you tell us a little bit more about the debt?
So TVS, we are very basic approvals are in place, and now more or less approvals are going place. We are targeting to launch that parcel by Q4 this year or maybe Q1 next year. But we are targeting that Q4 we should be able to launch. The pre-sales value of that property is around 2,200 crores, and we are very hopeful that we should be able to generate that type of pre-sales there. Of course, debt, there has not been any increase. We are the one of the companies where we have a zero debt in real estate, that is commercial sale as well as residential sale. So we continue to have a zero debt in real estate segment because sales are good, working capital cycles are good. So we don't think that debt should grow. Whatever debt is there is in LRD, which is 3,200 crores, and some in hospitality. That will continue. So whatever debt increase will be there will be in the form of LRD only. We are anticipating right now that we should not go. We will not be taking more debt in the residential segment.
Fair enough. And can you just tell us a little bit more about the asset-light model of expansion via JDAs, JVAs? Is that something that you're looking at? I only ask because a lot of your peers are now adopting this mode. What are your thoughts? Would it be biased towards land acquisitions perhaps going ahead?
See, Brigade, if you see the history of 36 years, we have been doing JDAs, and this is a very popular way of asset light model in South India, and this has been followed for years here. So in our strategy also, generally we prefer JDAs, but it depends upon the land parcel, how valuable that land parcel is, and how much sale realizations you can do it. But definitely JDA is a very, very good option. We generally, if you see in our land bank, 50 to 60% is JDA and 40% is outright sale. So it all depends as to how you are working on your margins for the company.
All right, and what about luxury projects? Because I understand that they've been performing quite well as compared to the affordable or the mid segment. Do you see this trend continuing?
See, luxury housing, yes, they have been doing well, but South is generally a mid-income housing market, and we do bulk of our sales in mid-income housing. As of course, like Chennai Mount Road will be a ultra luxury apartments. Even in OMR Road, what I was telling was a luxury apartment. So luxury apartments will be there, but if you say that large part of sales will come from luxury apartment, I don't think so. Majority of our sales will come from mid-income housing.
Okay, and are you looking at recalibrating your portfolio? Would you now maybe cater to more higher ticket homes?
No, I think we are happy with mid-income housing. See, the market where we operate, that is Bangalore, Chennai, and now we are going to Hyderabad. Hyderabad is a bit luxury apartments where there has been raised, but Bangalore and Chennai are a very price-conscious market, and we think that going forward, mid-income housing should be a good stay, and we would continue. To continue in this mid-income housing. Yes, of course there is no ban that we will not launch affordable or luxury housing. As and when the market demands, the launches will happen accordingly.
Good to have you on board. Thanks so much for sharing with us that outlook. So that's the management speaking to us about how the expectation from the festive season looks strong. They have also got luxury and mid-income housing that could look better, and they're looking to generate close to 2,000 to 2,500 crore rupees in pre-sales from TVS. Tell you what, we'll slip into a very